Money is such taboo in our culture. We don't talk about it. It comes with a lot of emotions. There's either pride or shame or guilt, fear, embarrassment. There's so many things wrapped up that it becomes something that we really don't want to talk about.
Welcome to Real Money, Real Life, the podcast where we get real about money and the messy human stuff that comes with it. I'm Linda Grizzly, financial educator and your Me Money guide to financial clarity. Each week, we dive into financial concepts and money strategies, but we always tie it back to real life, emotions, mindset, and how money actually shows up day to day. If you're ready for practical tools, mindset shifts, and honest conversations that meet you where you are, not where the world thinks you should be, you're in the right place. Because you deserve to feel confident with your money and good about how you use it. No judgment, no lectures, no lingo, and definitely no putting yourself last. Welcome to Real Money, Real Life. I'm Linda Grizzly. For the real ones who understand that facing loss isn't just about grief, it's about love, legacy, and making sure the right story gets told. This episode is going to center around how to care for aging parents as their financial power of attorney, with a focus on proactive multi-generational planning. We'll explore practical moves families can make to avoid unnecessary taxes, avoid probate, and preserve peace and money, plus the mindset and emotional dynamics that come with managing finances across generations. Today's guest is Chad Holmes. Chad runs a boutique financial planning firm out of Fairhope, Alabama, serving families nationwide as a flat fee financial advisor, no commissions or sales products, focusing on minimizing taxes and maximizing legacies from a multi-generational perspective. He is both a CPA and a CFP fiduciary. His latest accomplishment is becoming a best-selling author with his book, The Inheritance Playbook, helping your parents pass the torch, not the tax. Thanks so much for joining me, Chad.
Hi, Linda.
Hi. Okay, what else do you want to add? I always read the bio, but then I feel like there's something else you might want to say or include.
I think that's a wonderful summary, and I think people are more interested in hearing what action items they can take as they're helping their aging parents. So let's get into the fun stuff here today.
All right, great. And if you're listening to this episode and you're wondering when I mentioned in my introduction about the flat fee financial advisor, no commissions or sales products, please refer back to a prior episode where I talked about how financial advisors get paid, and that'll explain that to you. But yeah, let's get started on this. I want to ask you first, like, what made you want to write the Inheritance Playbook?
I run the small practice out of my house, and I was serving. I'm blessed enough that my family has trust in me, and my parents and all my grandparents were also some of my clients. And I'm trying to figure out how I can, what specialty I want to take my practice in. I was very general practitioner in the beginning, and how do I niche down and focus really hard on something that has a lot of value to families and something they need. And people would say, well, to figure that out, you need to figure out who you like serving. And I was like, well, I like serving my family, but I can't specialize in my family. There's, frankly, not enough, assets there to support a full-time business. So, um, I, I realized what it was about my family that I liked. And it was, we were solving problems differently. I am helping my grandparents go through and minimize taxes. But when I minimize their taxes, suddenly my parents' inheritance is no longer tax efficient. And there's different tax brackets between those generations. And then I have to start challenging, and is what I'm doing for my grandparents optimizing wealth for the bloodline? And selfishly, I'm in that bloodline, but that's not kind of really what this is about. This is, what if we step back and solve the problem from a multi-generational perspective? What if we looked at maximizing legacies and minimizing taxes from a two-generational standpoint? Current financial planning software doesn't do that, frankly, because there's too many variables going on. But when you just go old school, get pen and paper out, or in my case, Excel, and really just start challenging those general assumptions for financial planning, you realize that you kind of come to different conclusions than you would otherwise when you're just working in silos with each couple. Um, and then I wanted to write some blogs on it while we were expecting our second child. I'm like, well, I'm going to have no time to meet with new clients here soon, but I want to be productive. So let me just get a few blogs together and I'll release those steadily during the, you're self-employed, so it's not really paternity leave, but during my downtime. And I'm gathering everything and I'm researching and realizing I'm Googling questions and nothing's coming up. There's absolutely nothing out there on this topic. And so explaining it to some folks and they're like, I think that needs to be a book. This isn't just free blogs you need to put out, but an actual book. And so I put it together and it came out and quickly became a bestseller. And I'm not a marketing person at all. I put almost no money towards that budget, and it's sold over 7,000 copies. And clearly there's need for that information out there. And so I love talking about it, frankly, because there's just not a lot of folks looking at financial planning in this perspective. And so I'm pleased with how it's done, and I appreciate the opportunity to be on this podcast to help spread the word even more, because the more people we can educate here on things they can do themselves. There's a lot of DIY, free things, free tips throughout this book, and we'll talk about some of them here. Um, that can save tremendous amount of time. The government, whether they believe so or not, they've got plenty of money. They don't need more taxes. Let's not give them unnecessarily, no donations there. Let's keep it in the family as best we can.
I love it. Yeah. And I think what you're saying is absolutely right, because when I worked with it in financial planning and I had clients that would talk about their inheritance, they always focused on themselves. And a lot of times I would have to say to them, yeah, but what's the like, you want to leave this money, like, when they want to leave money to their children or their grandchildren, and trying to explain that if your goal is to leave a legacy for them, then you need to think about them from their perspective, because they were concerned about, just how do I get it over to them? How do I make sure it goes to them? Not the most efficient or the best way to do it. And I listened to your book on Spotify, and I loved that you had the stories intertwined, because it really helps people understand how it plays out in real life. So that was a great addition to that. And I like that there's a little bit of humor involved too. So tell me more about why you took the storytelling and there's a little humorous approach that you did.
Yeah, I'd say my personality is probably 70% sarcasm and 40% good with numbers. And so I took the book in the direction for mass audience, and I didn't want to just make it for tax CPAs or estate lawyers or financial advisors. I wanted everybody to be able to read it. And I speak with my wife about it, who's brilliant in her career, but not so much in the money world. And things complex. And until you start adding stories and characters and relatable situations to these complex ideas, it's very hard to get your point across. And so I came up with the idea of, okay, what topics do I want to cover? And what is the best way to cover that topic in a story format? We're talking about life and death in some of this, and it's a very dark, heavy subject. Um, and people don't want to read about that. So, what's a positive spin and empowering perspective you can put on these topics to make people keep turning that page? And so, I put humor, sarcasm throughout the book. Um, and I try to make it where people aren't bored, but they're also learning. It's not just entertainment. I try to do my best to merge all those different worlds in there together.
Yeah. And I think it also helps people remember, right? They remember the story.
Mhm,
So they
mhm.
remember what the rule is through the story. Now, I know I shared with you a little bit about my personal story. So I was a financial planner, and I made sure that my father was set up nicely. My dad was set up nicely with, all the documents in place, the powers of attorney, the trust, all those things. I even set up a trust for myself to receive his assets, because I'm in a blended marriage. So a lot of planning went into it. And, I had to talk him into doing that. He just had like a basic will. He didn't understand any of it.
Sure.
So I had to talk him into doing that. And I did that we revised everything in like April of 2021. And in August of 2021, he was in a car accident. He went to Home Depot and he never went home again. He
Mm,
didn't die. But I mean, the hospital called me and said, "We have somebody here and we think it's your dad, but we really don't know." And I was on a train, I was in my car, I was in a downpour, like, to drive to get to where he was,
mm,
to identify him, and he had had a brain injury, he was in a coma, and I had all my papers right there with me, and they, signed off on the healthcare POA right away. I was able to go start doing things like, everything. I was able to start doing things because I had that all set up, and I always talked about as a planner how important that was because you just never know when. And, that was to me, it was like I was living it. I was living that. And even though he's still living and I'm his power of attorney and everything, like, getting everything set up because changing his financial plan, because now his circumstances are completely different. So I had to change a whole bunch of things in his finances to set him up for where he was. And it was a lot of work. It was still really hard to do, but I cannot even imagine what that would have been like if I didn't have all those proper documents in place. So just wanted to share that story to say, like, I totally understand where you're coming from talking about not necessarily the inheritance part, even though that's part of what I did to reset things, but just the idea of having all this in place.
so when you got the call, um, you were obviously you're frantic. I mean, I can't imagine that phone call, and so you were able to put it together enough to remember to grab the documents before you left the house?
Yeah.
Wow. I I wonder what percentage of people would have remembered to do that, before an 11-hour trip.
Right. Well, so here's the thing. Here's what I did. So I don't want to take my too much time on my story, but I was on the train to go somewhere with a friend when I got the phone call. So I had to get off of the train and then get back on a train to come back the other way, just like a metro train here in the Chicagoland area. And then once I got home, I grabbed all my stuff and then I drove to my office and grabbed my computer and all my stuff so I could work remotely, and
Mhm.
then drove up to where he was. So by the time I did all that, it was like 11 hours. I got there at like 11 p.m. and I had to drive through a thunderstorm. It was pouring rain. Like, people
Of
were
course.
pulling over the side of the road. That's how hard it was raining. But anyway, I grabbed everything. And then I was up there for 9 days. But I had my laptop, my everything with me to work in the hotel room so I could do my work while I was there. But I think it also helped that I had time because I had to get off the train, get back on the train and then take the train back. So I had time to process what I needed to do.
Yeah.
That
Yeah.
may have helped. But anyway, I don't want to get totally off track, but the idea that
No,
you
I
need
think
to
this personal story is everything because let's talk about 2 things here. One, you had the documents in place. You did the planning ahead of time that saved yourself so much time in dealing with courts and, arguing and all that to get just the ability to speak on behalf of your dad. But 2, due to modern technology and your specific career, you have the ability to go work remotely. And not everybody gets to do that because we don't think about, you don't want to say the word burden or disruptive, but it to suddenly jump into the role of caregiver or being with somebody in the hospital, that takes away so much, especially if you're in your working years. And you were very blessed in a sense to be able to work remotely, as tragic as it was. Um, but yeah, not everybody's going to get that opportunity. So the more planning we can do to make this easier on ourselves, I think it's the best gift we can give to our children, is to create this open communication, understanding, hey, let's figure out what we need to do together because we don't know how we're going out, or, is it going to be a slow decline cognitively from dementia or something, or is it going to be a awful car wreck in a parking lot, like
Yeah.
just,
Yeah, and one more thing about my story before we move on, because I really want to mention this, is that I was sitting in his hospital room in the intensive care unit, and one of the doctors came in and was talking to me and was hesitant and was saying some things, but not other things. And I said, "I understand that you're trying not to tell me too much, but I have a power of attorney and it's in the file at the nurse's station. And he said, there is. And his eyes lit up. The doctor's eyes literally lit up. He said, let me go get that.
Wow.
Because here I was sitting there and I'm the person that's there for my loved one. And yet the doctor is not legally allowed to tell me so many things if I don't have that document. And how
And
am
they
I
don't want to get
supposed to?
sued.
Right.
Uh, uh, it's
So
just so
just the
tough.
idea that I'm sitting there and he's like trying not to say things. And I'm like, I have a POA. And he's like, let me go get it. And the look on his face was like, I'm so glad you have that.
And you had the durable power of attorney, right?
Well, this was in a state where it had to be springing, but
Okay.
because he was in the hospital, both doctors were able to sign off on it and then talk to me. So,
Immediately. Okay.
yeah. So I mean, it didn't happen quite immediately. There was a little bit of a delay, but it definitely, relieved him that was there. So, and maybe I'll let you do the description of durable versus the springing right now, because I think this is a good time to add that in, even though we really haven't gotten that far yet.
Yeah, yeah. So when you're setting up durable versus springing power of attorney, I spoke with an estate attorney last month. I was like, are people still in Alabama, you're not required to have springing. So I said, are people still getting that? Because it just seems so complicated. And the difference here is springing power of attorney means uh, basically you as the POA have zero power until an event happens that springs you into having suddenly all this power. Oftentimes, especially medically speaking, it's going to come from incapacity of the we'll call them the parent in most situations here. So when the parent's incapacitated, suddenly you can spring into action, but guess what? You can't do it until they've been declared incapacitated by oftentimes two physicians. And if you're in a situation where emergency surgery or something has to happen quickly and things are delayed because you're waiting on sign off from their PCP or whatever the case may be, you really put yourself in a pickle because now you're delayed and that power is powerless. Um, the other side is the durable power of attorney. And the second that is signed, um, basically you have the power to act as a fiduciary representative of your parent. Now, that can be tricky for families where there's not a lot of trust in the child, right? So they can, technically they could do bad things in your name, but that's not held to a fiduciary standard. Therefore, you could take legal action against them, but that's not what we want to do. Like that's not going to happen. That it can be tricky when there's not a lot of trust in the family. Um, and so maybe in those cases, it's like, yeah, I'll have my son take over, but I don't trust him enough to take over all the time. Just if something's completely wrong with me, they can take over. And so, you know, and like you said, some states are different and it can be very tricky. I'm certainly not an attorney, so I'm not going to speak to legal matters across all 50 states, but it's it's not a clear answer for every family. That's why there are the options. And to me, it would seem obvious, but then there's other situations where every family's different, and there may be past discrepancies with finances or trust, and that really weigh in on a family's decision to choose springing or durable power of attorney for either medical or financial. Those sometimes those are together, sometimes they're separate, but it's something to consider.
Yeah, definitely. Okay, so I want to back up a little bit and have you explain what the basic legal documents are for estate planning. And I'll make a disclosure that neither one of us are lawyers or giving legal advice. We're just providing education. But Chad, if you could let us know what those basic documents are. We know we talked about power of attorney, but there's different types. So I want to be sure we include all the things that we should be talking about here today.
Yeah, I'll talk high level here. Um, so power of attorney, you got medical and financial, and those can be as detailed or general as you want. You can say, hey, they have the power to specifically check my mail and close and sell my house, or it can be broad. You have total discretion to do whatever you want. Um, um, Everybody knows about wills, but there's also things like living wills, which are kind of directions for, hey, if I'm incapacitated, I would or would not want to be put on a feeding tube, or things like that. So, um, because the power of attorney is totally voided and useless once the person has passed away. And the will, if you're the executor of the will, that's totally useless until they passed away. So you've got, oh, well, I have power of attorney. I can handle the funeral and all that. Nope, that title is completely gone now. And a lot of people think that the power of attorney will last beyond life, but it ends abruptly. And at that point, you have the executor or executrix taking over, assuming person died with a will. There's you can have different kinds of trusts, and there's so many different kinds of trusts that are well beyond the topic of this discussion. Um, but one of the things that I think gets left out most of all, and it's not even a legal document, but it should be with all the legal documents, is just sometimes people call it like a love letter, but it's a letter of directions of, hey, here's what I want. Here's where my stuff is. Here's passwords. Here's how you get it. Here's just a full inventory or balance sheet of everything you have, how to get it, where it's at, things like that, directions, so that those settling your estate aren't on this crazy wild goose chase, just trying to find all the assets. And did they have life insurance still? I don't know. Did they have a safe deposit box somewhere? Like, people don't come out of the woodwork and just tell you this, because they're not made aware that somebody, their policy owner died or anything. You have to find all these things. And so to have this love letter in there that gives direction and guidance, um, that's the gift with the estate documents for sure.
Yeah, yeah. And I wanna go back and say, when I was talking about my dad's power of attorney, the one that was springing that needed 2 doctors to sign off was the medical power of attorney.
Hmm.
So his financial power of attorney was durable, and it gave me the ability to do a whole lot of things that most people's don't even give the ability to do. For instance, I added into mine that I had the ability to change his beneficiaries, which most powers of attorney don't.
Wow. Yeah.
But I at that time was an only living child, so I was the only heir, and I wanted to be sure that when I did my estate planning, that I could have the choice to change the heirs of his stuff to my children, which would be his grandchildren, so that I would have that flexibility to be able to do that when I did my own planning.
Hmm.
So just something to add in there, like, there's lots of different things that when you look at that durable power of attorney, it doesn't give you the ability to do every single thing. So you can
Yeah,
talk with
speaking
your
of that, I mentioned it in the book, if you don't have the ability to change beneficiaries, and parents are incapacitated, and you want to be able to do something, but you as second generation, you're set, you got plenty of assets, you're comfortable. But what if we could change the life of that third generation dramatically by having them inherit earlier? But you can't change beneficiaries, and you don't want to make the gift, because then we're cutting into your lifetime gift allowance. There's such a thing as disclaiming the inheritance. And so, like, if you were to be the natural beneficiary, you could disclaim it, and it would just go down the family line that way. And that's not always applicable, but it is something that can work in some situations where you do want it to go down to the next generation. Yeah, it's called disclaiming the inheritance.
Yeah, absolutely, and I've had clients do that before because they don't want it to go to them.
Hmm.
Okay, so there's so much to unpack here. We could probably talk all day about this, but I think one of the things that I wanna talk about is the mindset part of this, because it is so hard to talk about death. And so families avoid having conversations about their estate planning and sharing where things are because it's so hard. So a lot of times they end up doing it too late. How do you how do you think that we can have better conversations with our families?
Somebody has to be brave enough to initiate that conversation. Our culture has so much money is such taboo in our culture. We don't talk about it. It comes with a lot of emotions. There's either pride or shame or guilt, fear, embarrassment. There's so many things wrapped up that it becomes something that we really don't want to talk about, especially, and for the aging parents here, I don't want to tell my children about this money because there's a chance that I live a long time or my long-term care is very expensive. And so if they plan on inheriting this money and it's gone, then I'll feel really bad. Um, I would argue that's just not the way to approach it because um, by bringing in that next generation in on the conversation, having honest, structured. Let's get on the same page. Understand. I understand you're not guaranteeing me anything, mom and dad, but let me figure out how I can help you because if we're lucky, you're gonna live long enough that you're gonna need me to take over at some point, and I would rather have your input now while your mind is more clear, instead of having those years of all right, well, cognitive declines happen and I got to figure it out on my own. And mom's speaking in riddles and it just doesn't make sense anymore. And you're going to have to do that research either up front or on the back end. It's so much easier to do it up front for those listening that are able to than trying to do it on the back end when they're not there to help you or to guide you or give their input. Um, but yeah, having those conversations is not easy. There's an author named Cameron Huddleston who wrote the book called Mom and Dad, We Need to Talk. And while my book is more of tax and inheritance and estate planning strategies that you can implement yourself, hers is the psychology behind the very difficult conversations when mom and dad are trying to keep things, to themselves, or they're scared or afraid or whatever. Her book goes through so many scenarios of emotions that may be coming up, and what's the best way to promote healthy conversation around this planning. But yeah, it's Mom and Dad, We Need to Talk, and it's a really good resource for families that want kind of guidance on how can we best bring about uh, an open, honest conversation.
Yeah. So probably I would think both of your books in combination would cover a lot of the things.
Yeah,
And
I
so
actually mentioned her book in my book. Um, and then, Beth Pensker, she's a retirement author with Market Watch. Her book is coming out this fall called My Mother's Money. So Beth took care of her mother for many years as her caregiver, and, and she's a CFP and all this stuff. And so I'm actually quoted in her book that's coming out. Um, but she does a really good job of kind of sharing that very intimate story that's going through with taking care of our own mother. But that one's My Mother's Money, and that's going to be a really good one to add to. I'll call it the trilogy. I'll go ahead and say it. I don't know
the
if Cameron
trilogy.
or Beth would approve, but
Well, okay, so I want to go back to your book here really quick. So I was listening and I loved that you brought this one specific item out into the open because we talk about in financial planning, I would always talk about how a trust is going to help you stay out of probate. And we talk about staying out of probate, keep everything private, you know, make sure that you don't have to take that time. And so one of the things that you said, which is something that I am fully aware of, but I'm not sure that a lot of people are, is that sometimes you actually want to go through probate, even if you don't have to go through probate, because you have that opening of that window for creditors. So I wanted to just lean into that a little bit and have you share more about that.
yeah. So that I believe that's in the opening talking about why probate, because a lot of the book is how to avoid probate, but I also do kind of start off with, but it's kind of also a good thing. So the way probate works is, and every state's a little different, but you kind of have, you declare, hey, this probate has begun, it's open, and Let's say you have 6 months to notify the creditors, all known creditors. You have to notify them of the death, and they can say, all right, well, here's the final bill. If once, so their clock starts ticking once they've been notified. They have 6 months to come to you, get that final bill in. Once probate is closed, unless they can sue and say, hey, you knew that we were a creditor and you didn't contact us, unless something bad was going on, that probate's closed. And only after probate's closed should the assets be passed down to the probate assets be passed down to the beneficiaries. Because what you don't want to do is hand out all the assets in the estate, and then creditors come and there's nothing to pay. So then they have to claw back things into the probate, into the estate, so that the creditors can be paid. So it's really good to open that window, because the only way to close the window is once it's been opened. And so that's the beauty of probate. It allows for confidence that, hey, we can now receive these assets and know that somebody's not coming after them. One of the stories in the book, I talked about, there's a family wanted to avoid probate. And this is very common. I've heard about it, especially after writing the book. People have reached out, but I've heard about it a lot. We want to avoid probate, so parents gift their house to the children. And now, when the parents pass away, the children don't have to probate the house. It's in their name already. They can sell it as soon as they want to. Super easy. But this is a tax trap, because what happens is parents bought the house for $100,000 20 years ago. It's now, with today's prices, it's now worth $500,000. So if the parents were to sell it, there'd be a $400,000 capital gain. But I won't get into why that wouldn't happen if they sold it. But when they gift it, they gift their basis also. So now the children own the house, and the basis is $100,000, and the house is $500,000. If they sell it, the children will have that $400,000 capital gain on which they pay taxes. However, if instead they had inherited the house, they get what to me is the most powerful inheritance tool out there, is called the step up in basis. And the step up in basis happens when you inherit an asset, an after-tax asset. So IRAs don't really count, but an asset that, let's say it had a low basis and is currently valued much higher. Your basis now is equal to that value on the date of death. So if you inherit this $500,000 house and now your basis is $500,000, you can sell it and there's zero capital gains. So people have tried to avoid probate, which, admirable, that's great. I like the effort, but what you've done is generated tens of thousands of dollars in unnecessary taxes. And probate's not fun, but you shouldn't pay tens of thousands of dollars to avoid it, right? Um, so I think, and a lot of the book is about getting partial advice from people that aren't truly experts. You know, a lot of the characters in the book are kind of acting on something they heard somebody else do, and they're trying to be smart, and then whoops, we find out, oh, there's a big tax bill at the end, and here's what we owed, and here's what we could have done differently. That's kind of how each chapter in the book is structured. And the one on gifting the house kind of just talks about how they did avoid probate, but all the tax dollars came due, and it was a surprise that they had not budgeted for.
Yeah, and I think you have a line, "Passing the torch, not the tax," and that's exactly what you're talking about right now. There's ways to do that where you pass it better and you can eliminate the tax part of it, so I love that. And
Yeah,
I think there's one key thing that we're talking about here is that there are so many moving pieces when it comes to estate planning and tax planning that, like you was just said, like you started to talk about the parents selling their house and you're like, okay, well, there's different tax rules about the parents selling the house, and I'm not even going to go into that. Like there's all these different things that play into it that it's really important that they look at all angles, right? That they look at the angle from the parents, they look at the angle from the inheritors, the children. Like just to see what makes the most sense.
There's a whole lot to consider here, and uh, shameless plug here. Not only am I the CFP, but I also am a CPA, so I have a deeper background and understanding of how the taxes work with all this stuff. And so, in working a lot with this multi-generational planning, um, it's a pretty common phrase out there when you're with an advisor. It's like, okay, well, you need to talk to your CPA about that, and I just kind of shove the problem off onto the next professional. And that's never a phrase I like to say because it, it it's not helpful. And so we, as the financial advisors, need to understand taxes. In fact, I require clients to provide their last 2 years tax returns, because if I'm giving financial advice but not understanding how it affects the tax return, then you're missing. That's working with your hands tied behind your back, because who cares if you can do this and save X amount, but it's all gone or eaten away, or the benefits totally erased because of some other situation that's going on that you weren't paying attention to. So having that full comprehensive review is where the value comes in. Financial advisors are no longer stock pickers. We are the comprehensive review of your financial world. And if all people are doing is talking about stocks, then that should be automated by now.
That's so true. Yeah. And it's important that I believe like you're both, right? I don't know if you do taxes or not, but at least you know enough about that. But it's important that both the CPAs and the financial advisors understand that sometimes the financial advisor is looking at the long term and the CPA or the tax person who's filing the taxes is looking at just this year. So there can be a conflict. It's not that uncommon for there to be a conflict between what a CPA is telling a client and what their financial advisor is telling them because they're looking
Extremely.
at it from two different lenses. So just because they're telling you two different things doesn't mean that either one is wrong. They're both probably right, but you have to figure out how they can work together and what's the best decision for you. Like, what are you planning for now, or are you planning for your future?
Absolutely. So an example of that could be, um, especially with Roth conversions. So a Roth conversion is you have an IRA, and when you pull money out of the IRA, you're going to pay ordinary income tax on those dollars because you got a tax benefit when you put it in there. And what you could do if you have a low income tax year, so especially between retirement and when you claim Social Security, um, there's some years of lower brackets usually. And those may be a great opportunity to go ahead and pull that IRA money out and pay tax on it and put it in a Roth IRA. So in the Roth IRA, you don't get a tax benefit for putting the money in there, but it grows tax free and it's pulled out tax free. So dividends, appreciation, all that, trading, nothing's taxed. And so, um, what I will tell people as financial advisors is, yeah, these are great opportunities to pay lower tax rate on this money before Social Security kicks in, or whatever we're trying to do, or it's a better asset to pass to next generation. There's many reasons you may want to consider this. Um, and so what I'm literally telling you, hey, let's pay more taxes right now, because over time it's going to lower yours or the bloodline's tax bill. CPA may see it and say, "Whoa, whoa, whoa! What? Your advisor is increasing your tax bill. You need to fire your advisor." And it's like, okay, we're solving two different problems here, and so it's good. I'm very lucky that all my clients have connected me with their CPAs, and we do very proactive communication. I consult with them and say, "Hey, here's what I'm thinking about. What do you want to do?" And so I work with my client CPAs because I do not file their taxes. I do tax planning and tax review and strategy, but I chose specifically to not offer filing. Um, but I like working with CPAs, and all but one occasion it's worked out great, and we've been able to uh, brainstorm ideas together, and the clients love it too, because they're like, y'all just talk to each other, leave me out of it. I don't care, I trust you. And it's really, really a powerful way to have to merge the tax and financial side of things.
Great. And if you could have If you could leave one tip for our listeners about what they can do to build a better inheritance and build a better legacy, what would that be?
Um, I'd say the first thing is building your own inheritance, is go ahead and have that conversation with your parents. Let them know ahead of time before you just show up and start asking all these questions. Say, "Hey, I wanna talk about this next time I come over." That allows them to mentally prepare, and you need to come with specific questions. Come understanding that they may have shame or guilt around their finances. You need to make it clear that you're not trying to take advantage of them or trying to steal from them. Be patient and kind. Stay calm and expect that they're going to have some pushback in some of these areas. But um, knowing what you want to talk about and giving them the heads up can be a very helpful way to get this ball rolling in the right direction. On the book's website at theinheritance.playbook.com, I have a bunch of free downloads, and one of the things, I think it's for chapter 2. It's a resource mentioned in chapter 2. It's like an inventory checklist. So you download this spreadsheet for free, and it's a good way to brainstorm. Like, okay, have we thought about all of these different things, so that when the time comes, we uh, we have a plan in place. I know what I'm doing. I have confidence, and I know that I'm doing what mom and dad want me to do. That there's a lot of guilt around inheritance sometimes. I was like, I didn't earn this money, but to feel like you know that you're doing what they wanted allows you to be a good steward of their legacy, and that can really change the perspective on how this inheritance works for your family.
Yeah, absolutely. That's great. And I also want to add to the younger people that might be listening, just get your estate docs in order. If you're over 18, please have your powers of attorney set up, health care and financial, so that someone can step in and help take care of you should something happen. Um, and then, of course, your will also is important. So I just wanted to add that. Um, any last uh, any last things that we didn't cover that you want to be sure the listeners know?
Um, I'd say do this exercise. And Linda, this may be a little emotional for you, but pretend you're Linda here. You just got a call. Mom or dad was in an accident, and or they had a stroke or whatever it is, and they're confused and they can't talk anymore. So for the listeners, take a deep breath and realize this is just an exercise. But coming back, what do you do? How do you access the accounts? How do you know what bills need to be paid? And how do you know how much cash is in the account? If these questions kind of have you thinking, I don't have a clue, I think that recognition is the biggest motivator for people to think, okay, we need to start talking about this. I need to get a plan in order, um, because this isn't like, oh, 1% of families, like so many families end up taking care of their parents or in some way or another. And it is a very common thing. And we want to honor our parents because they did so much for us. And at the same time, we don't want to tip the government. We don't want to leave, pay unnecessary taxes. And money's tricky. It really is. And families fight over it
Yeah,
so much. But if we can plan together, I think that's kind of the only way this works.
yeah, I agree with that. All right, so where can people find you and your book?
So I am at formulawealth.com. My email's chad@formulawealth.com. The book is on Amazon or Spotify. I did the audio thing, which nobody likes listening to their own voice. So the hardest part of writing the book was editing the audio when I had somebody master produce it. But they're like, hey, listen to this and make sure it's okay. I'm like, oh, I hate this. So nobody likes their own voice, but I tried to make it entertaining for you. Um, you can sign up for my newsletter at formulawealth.kit. kit.com, KIT.com. And I send out a short, entertaining, helpful, educational piece every few weeks. I do not bombard you and I do not sell your email address. Um, and then I actually just came out with a new offering called the Life Audit. And with the Life Audit, it is for people that aren't ready to be with a financial advisor, but they know they could benefit from the discussions. So it's a 1 month, 3 meeting engagement, no products to sell, just we high five at the end. You walk away after 3 meetings, and we're done, and you are feel so clear on what to do and what needs to be done going forward. Um, so I'm really excited about that. And you can learn more at formulawealth.com/life audit. Um, and then, yeah, probably online, Instagram, Facebook, just at Formula Wealth.
Great. Thanks so much, Chad. It was a pleasure. And like I said, I'm sure we could keep talking about this, but it's time to sign off.
Thanks, Linda.
Thanks so much for listening to Real Money, Real Life. Want to see what's blocking you from financial confidence or discover your money personality? Head to the resources page at lindagriz.com for our free quizzes. That's LINDAGRIZ.com/resources. If you're loving what you're learning, be sure to subscribe and leave a review. I'm your Me Money Guide to Financial Clarity, Linda Grizzly, and I'll catch you next time as we talk more real money, real life, because you deserve to feel confident with your money and good about how you spend it. The content shared here is for educational and entertainment purposes only. It is not financial, tax, legal, or planning advice and does not constitute therapy or mental health counseling. Please consult an actively licensed and qualified professional for advice or help specific to your situation.